Hello everyone, welcome to today's video where we will be talking about Tesla and its upcoming earnings for the second quarter of 2023, which are due on Wednesday after US markets close, and Netflix is also on the same day, kicking off things for the tech sector. I'm your presenter, Nikos Tsambouras, Senior Market Specialist at FXCM. Just to timestamp this video, it is recorded 2 days ahead of the July 19th earnings on Monday, July 17th. Before we begin, please read carefully through the risk warnings and the disclaimers, and then we will get started. Okay, let's get the ball rolling. We're gonna start and talk about some of the high points we've seen this year from Tesla, and then we're gonna go ahead and talk about some of the headwinds, but let's start with the positives first. So the company has already released earlier this month, typically, the delivery and production figures for the second quarter. And both of those hit new records. And let's also see that with this graph here. So deliveries hit 4,066,140, and production hit 479,700 units. So these are record figures, and they were largely a result of a series of price cuts that started back in late 2022 and carried well into the second quarter of the year due to demand concerns. You can see that there is a gap between delivery and productions, which is what creates those demand concerns that I mentioned. And you can see on the left chart, this first appeared during the second quarter of past year, and it persisted, as you can see on the right, during the second quarter of this year, although it has narrowed. However, we will talk more about this gap and the demand concern and this price cut that it actually sparked a little bit later in today's presentations. Now let's stick to the record delivery and production figures, which is one of the high points this year for the EV King. Now, the company has not released any new passenger cars in years, but it looks like this is going to change in 2023 and likely quite soon, because Tesla expects to begin handing over the first Cybertrucks, the long-awaited futuristic pickup truck, as early as within this quarter. And it also looks like it's working on a refreshed Model 3, not a new car, but a refreshed version of the Model 3. Now, the Roadster was pushed back, according to Mr. Musk's comments a couple of months back, was pushed back for 2024, but in any case, that's likely going to be a niche model and not something that will have a big impact in terms of output and in terms of revenues from it. Mr. Elon Musk, the CEO of Tesla, also unveiled his Master Plan 3 earlier this year, where other than laying out a vision for a world without fossil fuels, execs outlined the next-gen manufacturing platform, which will lead to a 50% reduction in costs and 40% less manufacturing footprint. Now, this would allow Tesla to produce an affordable car, although it's hard to see that this year, but we're going to have to see. This definitely would allow Tesla to produce an affordable electric car, which was part, after all, of the original master plan all the way back in 2006. More recently, on the mid-May annual shareholder meeting, Mr. Musk teased two new models, but it's unclear exactly what these will be. But it's hard to get something concrete about this new affordable model. But it's going to be on our focus from the upcoming earnings report. We'll talk about it more later. Now, these positive things for the company that we just briefly outlined are also liked by markets because the stock, as we can actually see here, has actually more than doubled in the first half of 2023 after a losing previous year. Of course, that's along with the broader tech sector. It's not just a Tesla thing. It set new year highs this month, and that was after the latest delivery production figures. And there's a golden cross also formed on the technical front when two EMAs cross. But there is also risk for a pullback at this level, even though the golden cross generally points to potential for more gains. However, that's not our focus today, not the chart and the technical outlook. So let's go back to our presentation and now talk a little bit about some of the headwinds that the company is facing. There is an adverse external environment, not just for Tesla, but for the whole industry. That was probably more so the case last year, but these adversities still persist. High interest rates make funding for new cars more expensive, corporate lending costlier, economic uncertainty puts consumers off and makes corporations hesitant to invest. And of course, high inflation pushes car prices up, and these are some of the factors that all automakers have to grapple with, and they're still present, although there are signs of improvement. And of course, we have talked about that again. EV startups are even more exposed to that. Now, Mr. Musk actually alluded to these headwinds. He said in the mid-May shareholder meeting, he warned that Tesla is not immune to the global economic environment and that the next 12 months will be challenging, but believes the firm will emerge from that in an extremely good position. His words, extremely good position. But again, he spoke about challenging 12 months ahead. And of course, all of that has created, even though the EV market is expanding and it is expected to continue to expand at fast paces, there has been concerns around demand, and that was evident in the delivery output gap we referenced earlier. Once again, on your screen, you can see how there is a difference between delivery and output, with output being higher. Thus, this means that there is lower demand. It cannot sell as many products, and not only Tesla, as it produces. And as we said, because of this delivery, this gap and this weak demand, concerns around weak demand that we see over the past few quarters on this graph, which persisted but was not eliminated in Q2 2023. This concern forced Tesla to slash prices repeatedly, starting from late last year and well into the second quarter. This, however, hurt its profitabilities, with Q1 net income slumping by 24% year over year and by more than 30% compared to the previous quarter. Gross margins dropped below 20% again in Q1 for the first time in 2 years. So we can see that Tesla's bottom line definitely took a hit, its profitability and its margins. However, Tesla's margins are still the envy of the industry, and this allows it to chase profit over margins. So the company essentially made a conscious choice on that. And let's actually go ahead and listen what Mr. Elon Musk had to say about that during the Q1 earnings call.
And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin.
Okay, that was Mr. Elon Musk a couple of months back in the Q1 earnings call around the margins and that they prefer to take a hit there in order to produce more cars, which is one of the main goals and big bets of the company to continue ramping up production. Of course, the EV market is getting very competitive, the electric vehicle market. Tesla is the undisputed leader, but legacy auto giants and startups alike are making strides in electrifications. And now we're in a period where Tesla's lineup is, let's say, old. It has aged. The Model Y, which is the world's best-selling car in Q1 of the year, according to Yahoo Dynamics and Motor One. But it is the newest vehicle, and that was launched all the way back in 2019. So we can see how Tesla's fleet is aging. Now, we said earlier that new models are coming, the Cybertruck, one of them, which essentially created the electric pickup truck market when it was first unveiled in 2019. But a long time has passed since then, and will now have to compete with Rivian and Ford, which are already established makers in this segment, and of course more contenders are entering. We also said earlier that Tesla is probably it looks like it wants to create an affordable car, but German behemoth Volkswagen, for example, has already announced an entry-level electric car to be priced in at just 25,000 euros by 2016. So we can see that even there's good chances that someone else will beat Tesla to that. And now let's see some of the focal points from this upcoming earnings report, which again is due in July 19th on Wednesday, in a couple of days after market closed. So based on what we've discussed so far, the financial top and bottom line would definitely be in focus once again during this upcoming Q2 report. Profits had slumped and margins were squeezed in Q1. And although we had record deliveries, this means that the strategy is working. But how much of a hit can it take? And like another hit in its margins and profits, can Tesla do that? And how markets will react, and at what point they will start disliking that. So it will be interesting to see how the financials progress and how markets actually react to it. Now, we talked about the new cars, immediate ones, expected ones, and longer term models. But specifics are scarce, and any updates on timelines for each of those would be welcome, and in general, more insights around how its fleet will shape up over recent months and years. And again, this is crucial because competition is increasing and Tesla's fleet is aging. Of course, the game changer will be a cheap model, and that we would like to hear more about, but we don't know if Tesla has such plans indeed and will give us anything more in a couple of days. Now, the other ties with the financial, essentially because it's pricing. Will it be? Does the company intend to keep cutting prices, or will it stop? Will it relent? So that will be interesting to see if it has intentions for more. And another area which I would like to hear more is around factory progress, because that's the other major bet for Tesla. We said earlier, ramping up production as fast as it can. Tesla manufactures vehicles in Texas, Nevada, that's the semi, China and Germany. This year it announced a construction of a fifth plant in Mexico to facilitate this goal. And there are reports that it's also looking to expand in India as well. So any news around that will be interesting to hear, any updates. And more to it, it is also moving into lithium refinery, which is a key component for battery manufacturing. And this need was created after prices of commodities shot up due to the Russia-Ukraine conflict. And we already know that it has broken ground on this plant in the US, and any updates will be welcome. So as we're wrapping things up, just recap everything. The new earnings season finds Tesla well positioned to weather headwinds and any further price wars, because again, it has the margins to support that, and that's even more important against startups, which are, most of them are unprofitable. Competition is making progress fast, but Tesla is ahead. It has a broader clean energy vision. It is ramping up its production. It's working on new models, and also has made big steps in conquering the charging market in the US, since Ford, GM, and others adopted Tesla's charging standard. Not only that, it's also moving into lithium refinery, which is another first, as we just mentioned, and is also doing leading work on autonomous driving. It's also working on humanoid robots and much more. So once again, the results are due for the second quarter are due in 2 days on Wednesday, July 19th. That's it from me. Thank you for following.